Right now, the entire Bitcoin market is being held hostage by a single number, and it's setting the stage for an absolutely massive move.
So, here's how we're going to break it down. We'll look at the setup, the forces pulling price up and down, the key flashpoints to watch, and then our final analysis of this whole liquidation battlefield.
That number is nearly $59 million. Now that represents a single, incredibly dense pocket of leveraged bets. It is the peak liquidation point that's literally dictating Bitcoin's every single move right now.
And this heat map shows you exactly where that capital is clustered. Look, this isn't just some random trading activity. It's a coiled spring. We're talking billions of dollars in leveraged positions that are now incredibly vulnerable to a price swing of just a few percent. The stakes really couldn't be any higher.
But here's the real puzzle, the thing that might not make sense at first. After a pretty big drop in price, you'd think the biggest danger would be below us, right? Well, the data shows the largest pool of liquidations is actually sitting above the current market price. Why is that? Stick with me because we're about to unpack it. And hey, make sure you're following us on Twitter for more updates on structures just like this.
Okay, let's get right into it. The first major force of play is this massive wall of short liquidations that is acting like a powerful magnet, trying to pull the price higher.
Take a close look at this heat map. See that incredibly bright, dense yellow band right around the $88,000 level? That is a huge cluster of short positions. So, if the price starts pushing into that zone, it's going to trigger a cascade of buy orders as all those shorts are forced to cover their positions. And that, my friends, is pure rocket fuel for a potential short squeeze.
And just so we're all on the same page, a short squeeze is exactly what it sounds like, a violent, rapid price surge. It's caused by all those short sellers getting forced to buy back in, which creates this crazy feedback loop of more and more buying. It's one of the most powerful moves you'll ever see in a market. And if you're getting value from this breakdown, do me a favor and subscribe to the YouTube channel so you don't miss the next one. But, and this is a big but, it is absolutely not that simple. There is an equally powerful force that's pulling the price in the complete opposite direction, and it's creating a very dangerous trap for anyone who is over-leveraged on the long side. Okay, now I want you to shift your eyes to the bottom of the chart. See that other bright yellow cluster down there? That's a massive pool of long liquidations, all stacked up right around the $84,000 level. Now, for the big market players, this is an equally tempting target. Wiping out these long positions is just as profitable for them as triggering that short squeeze we just talked about. So here's the bottom line. We have a perfectly balanced battlefield, a tug-of-war. At 88,000, you've got the fuel for a massive short squeeze. At 84,000, you've got this giant pool of long liquidations just waiting to be tapped. The market is literally caught between these two powerful magnets, and it cannot stay here forever. If you're finding this analysis valuable, go ahead and drop a like and share the video.
And that brings us to the most critical part of this whole thing. This isn't about just betting on one direction. It's about knowing the exact trigger points, the flashpoints that are going to unleash the next major move.
This slide shows you the only two levels that matter right now. A sustained, convincing move above $88,000 will almost certainly trigger an upward cascade. On the flip side, a decisive break below $84,000 will trigger a downward one. These are not guesses. These are the lines in the sand drawn by billions of dollars in leveraged capital.
And the process that follows is purely mechanical. It's like dominoes. First, the price breaks one of those key levels. Second, a wave of liquidations gets triggered. Third, that forced buying or selling creates insane momentum. And finally, the price just explodes in a violent follow-through. It all happens incredibly fast. You should follow us on Twitter for real-time updates when market structures like this start to heat up. So let's put it all together. How should we be thinking about this market? What is the strategic takeaway from all this data?
The most important thing to understand is that right now this market is not about news, it's not about narratives, and it's not about sentiment. It's purely mechanical. Price is simply hunting for liquidity. The path of least resistance isn't just up or down. It's specifically towards either $88,000 or $84,000. That's where the fuel is.
So here's what you absolutely need to take away from this. 1. The market is coiled tight for a very high velocity move. 2. There's extreme leverage on both sides of the trade, which pretty much guarantees fireworks. 3. This period of consolidation is going to resolve violently. And 4. The paths of least resistance are crystal clear. 88K to the upside, 84K to the downside. If you found this useful, make sure you're subscribed to the YouTube channel. You won't want to miss our next one. And so we end with the one question that really matters.
The market is wound tight between two gigantic pools of capital. One side has to give. Is it going to be the short squeeze magnet waiting for us up at 88,000 or the long liquidation trap that's set below us at 84,000? Which level do you think breaks first? Subscribe and drop a like below. Follow us on Twitter for more updates, and we will see you in the next one.